Welcome back to the Forex is Easy trading blog. Here's the address for the blog down here, Forex is Easy, my own trading blog. Now, I'm just going to go through a couple of trades on the USD Canadian dollar, USD CAD. On the 4-hour chart, this is a couple of trades that I went through. Had a loss, I think 40 pips on the blog. I'll just show you my method here and what happened. Initially, I gave an order to buy the Canadian at 1.1112, which is up here where this red line is. And we had this big downtrend. I was just looking for a place. As you see, the market went down. And I'll move that writing out the way. Alright, the market was going down, and the yellow lines. So I was just looking for a place to get an entry, so I was just playing with my yellow lines. And here we had a little bit of a pullback up there. So what I did was I moved my entry point buy point there, which was 1.0804. So as you see, the market was just heading down. I just kept on moving my yellow lines, and bang, up it went through the red line, which gave me my entry. Now that was the first trade on the Canadian. That gave me my initial entry. So what happens there is this low here now becomes my SAR, my stop and reverse. So it goes down to the bottom there. I'll bring my blue line down. That's my entry point. So it's across there. Now I put a yellow line across the top of the candle that gave me my first high. And what I do is I normally just pull my other yellow lines that aren't in play, put them, in this case, put them below the red line, so they're out of the way. So what we've done, the market's come up here. Remember that was my red line before, my entry, it's gone up there. It's given me a new high, so we're in the trade. Now the SAR was originally placed, the stop and reverse, and 10662. So my initial risk is between this red line and that blue line, which in this case is 142 pips. So really the market's just gone up with that spike and came back down. So it's running a bit of a loss. And we have a new high here. So I'll move up one of the yellow lines. And the market's had a bit of a pull down to this level and back up. So what I've done is I've just moved my SAR up to that low level there. I just want to reduce my risk as quickly as possible on these trades. So the SAR has been adjusted to 10734, which reduces my risk to 70 pips. The risk is the red line to the blue line. So what we've had a new high back up into the yellow lines and through them. So I moved my third yellow line up there. And after that we've had a new high also. Now I've seen this without looking at the, just move it across, without looking at the line, won't let go, without looking across the right hand side of the chart, had this nice spike up. I have taken the chance to move my SAR up to that level there. Now that brings it up to 10764, which reduces my risk to 40 pips on this trade. As I said, I always look for a way to reduce my risk as soon as possible. So what's happened then, the price has got up and bang, it's fallen right through, back through my SAR, my stop and reverse. So I've lost 40 pips on that trade, which is not too bad for a 4-hour chart. 40 pips, I can live with that. So now what happens, we're now short. So this top yellow line gets moved down to the low of the candle that gave me my entry. The red line gets moved up to where the yellow line just came from, so they swap places basically. My blue line gets moved to my point of entry, and as I said, I move my other yellow lines above or below the red line, just get them out of the way of the chart, makes it cleaner, easy for me to see. Now we're short. Now that risk, that SAR level is 1.0888, so there's 124 pips risk between that red line and that blue line. So we've had another new low there, so we'll bring one of our yellow lines down there. And I'm pretty sure that's, I'll just check that one, it looks like it's lower again. It's very, so it's low. 1075, low 10, yep, that's lower, and so is that. So that's a new low there, just below it, and there's a fourth new low. So now we've got all four yellow lines in play. There's a new low there. So the price has gone out of the yellow lines, back into them, but it's still not. We're still in this trade. I'm not going to move my SARs yet. You might be thinking I might bring it down to that high there, which would reduce my risk, but I'm going to see how it pans out early in the week next week. Hopefully the market will roll over and head back into the yellow lines. If that's the case, then straight away that SAR will be moved down there. But at this stage we're short at 107.64 with a SAR at 10888. So it's a 124 pip risk, and the market were just a few points. This blue line is the entry level for a short, and as you can see the market closed up just above it on Friday. So it's pretty bit messy in there, but it just shows you how I reduced that risk on that initial long trade down to 40 pips, and that's what we end up losing. So that's it on the Canadian. I'll do one on the Aussie. That was another loser, so I'll show you that one next. Thanks for that.